Well, I don't think we're going to learn very much, unfortunately, at Jackson Hole. I think Jackson Hole will follow the usual formula. The central bankers will stand there for the photo shoot in front of Mount Moran and project an image of stability and balance. I think the Fed will probably learn more when we have the next data prints. We talk about the PCE release on August the 30th. We look at obviously the August payrolls report when that arrives in early September. So I think those are going to be the guides perhaps to how hawkish or dovish the Fed chooses to be at the next meeting.
I've been hopping on this whole day though about Fed communication having to be clear, having to offer perhaps a strategic forward stance as well. Do you think that they've actually navigated this entire thing, I don't want to say correctly, but just as well as they possibly could, higher for longer, etc., and when they begin to cut?
I think there is perhaps an implicit acknowledgement in some of the communication at the moment that they were late on capturing the scale of inflation in 21, 22 and responding to that. And so they're keen not to miss the boat this time round. You still have those hawkish voices if you want to look for them. You mentioned Raphael Bostic's comments last week in the US. If you look at the Bank of England, you have Dr. Catherine Mann making pretty hawkish comments over here, saying we shouldn't be seduced by the way that inflation has fallen back into a false sense of security. So I think they're looking for balance, but I think they are psychologically impacted by the experience of not fully capturing the inflation upswing in the last part of the cycle.
Just give us a hand in terms of investment ideas from here, because the markets that bounced back aggressively last week was the Nasdaq, and it was also the DAX. That's where you saw a little bit of appetite, the German stock market. But what do you like in terms of the geographies at this stage?
I think we still favour the rest of the world over the US, and as I said, that is a contrarian trade in and of itself. That's where the value lies.
It's a wide area, rest of the world, though. Does that include Japan, China, Europe? And which areas are more dominant?
I think Europe and Japan, there's certainly been overweights for us, and they continue to be overweights for us. But you have the protection. If you invest on an unhedged basis in Japan, you have the protection of the currency that might appreciate, and it's shown a very clear negative correlation with the performance of the Japanese market. One other thing I'd say on the economic side, which I think is an anomaly, market pricing for recession in Europe is nothing like as clear as market pricing for the possibility of recession in the US, and I do think that is anomalous. And it's another thing that leads me to think that what we've seen over the last few weeks is a financial panic rather than an economic panic as such. So I'm not so concerned about the economic side, and I think that means that you can take that more aggressive bet in terms of going into those lower valuation, perhaps underpriced equities outside of the US.